What's going on YouTube? Today I'm going to talk about SoFi because SoFi has been tanking in the market still, and I don't think that it's done going down in price. And for one is because it's unprofitable and there's a million other loan services and banks out there. But the worst thing is that it is unprofitable. And it's not that SoFi is a bad company or anything. I actually really like SoFi as a company, but I think that it's a very risky stock to be in right now because of the recession. I'm pretty sure like we're about to be in a recession or that we are in a recession. If you think about it, the Fed is not done raising rates, so there's going to be more rate hikes in the future. And you know, there's the war and there's so much stuff going on in the market. There's a lot of fear, and I'm not saying it's not a buy. I would just say it's not a buy for me right now at the moment. I did buy some at like $7 and I sold out because I think that SoFi is going to keep going down. Personally, don't get mad at me for that, but I actually am selling a lot of my stocks. I sold Toyota, I sold Amazon, because I don't think that the stock market's done tanking. Because if you think about it, all these people that got their stimulus checks in 2020, a lot of people put their stimulus checks into the stock market, and it's caused the stock market to shoot up with retail investors. And now the retail investors, we don't got our stimulus money anymore. We don't really got any money because of all the inflation that's happening, which is also bad for the stock market. So we got less money to buy stocks, and the stock market's tanking, so people don't want to buy stocks anyways, and then the big institutions are selling off their stocks, and all these stocks are just going down. I think that eventually SoFi could be a buy, but I want to see their next quarter. I want to see a positive return. They do have a good revenue year over year, right? Their revenue was 280 million in just one quarter, the Q4 of 2021, but their net income is negative 111 million. That's negative 40% net profit margin. So they losing money, and the only way they really can pay their workers is by using the investment money that we put in to the stock. They really don't make any money at all. And there's also 100 different freaking online banks, right? So why would you need to go to SoFi? I mean, yeah, you can do your investing in SoFi, you can do you can check your credit score, but hey, I already have Credit Karma. I already have other good investing brokerages like Fidelity. There's no need to invest with SoFi. All these platforms are out there, and they're trying to shove all these platforms into their one platform, which means that they're like the jack of all trades, right? And I feel like people really ain't gonna want to use SoFi for investing. I mean, it's good for checking your credit. Look, I made a SoFi account, and then I tried signing up for their banking because they have a 1.25 interest rate on it, and they denied me from opening a bank there. So I don't know why they did that. But you can get personal loans, but why would you get a personal loan from SoFi whenever you could go to your bank and get a better interest rate? Because their lowest interest rates are like 7% at SoFi. You're probably not going to get 7%. You're probably going to get like a 10-12% interest rate on your loan. So I'm not going to get a loan for that much money, especially a home loan. SoFi 2-year rate is 7% to 18%, and for some reason a 4-year rate is 8% to 20%. If you use SoFi, you're gonna get a super high interest rate on your loan. So you don't want a loan with a super high interest rate. It's not good. You're gonna be paying 12-15% on your loan, and you're not gonna be able to like make any money through investments, because hopefully you're getting like a 10% return every year, but now you're paying so much in interest, it's not a good idea. So you could go to a bank and you could probably get a 3 to 4% interest rate if you have decent credit. If you're a SoFi investor, you can go in and you can get insurance through SoFi, you get all your loans through SoFi, you can do your banking through SoFi, refinance and stuff. If you want to refinance with SoFi, your freaking interest rate on your car should be like 15-20%, because getting a 6-7% interest rate isn't really going to help. Super high interest rates is what I'm saying. You know, I don't think that very many people are going to be using SoFi insurance. Maybe they will, but it's going to be a while before they take off, because we already got the Upstart or whatever, and they're like doing really well. These new speculative companies are going to drop during a crash. It's going to be hard, and you're going to be holding on for a long time. I'm probably going to wait and watch the stock, and then whenever it goes down even more to like $2 a share, I will probably buy a lot of it. because I don't expect any of these unprofitable companies to go up in 2022. I think all of 2022 is going to be really hard on the stock market. We all thought that it was about to start going back up, but no, it just tanked down even more. And then imagine when the next interest rates come out. It's going to be insane. So, Jake, what do you think I should do if I shouldn't invest in SoFi or unprofitable companies? Well, this is what I'm going to do. I'm going to invest in ETFs. And there are a few ETFs that I like to invest in. And one is VTI. It's down near its 52-week low. So I think it's like a super good time to get into these ETFs. And I'm not saying that they're going to keep going up after today or anytime soon, but I know over a 10-year period, they're going to be a lot higher than they are now. Because if you look at the last 5 years, they're up 71% on VTI. You're going to slowly build your money with ETFs. So what I want to do really is like sell out of a bunch of my stuff or just hold on to everything that I bought that I'm down on, because I'm down on everything, and then put it into an ETF. And then the rest of my money that I invest, and instead of putting it into SoFi and companies like that, I'm going to put it into the VU or the VTI or the VGT, into the ETFs of Vanguard. So VU is doing a little better than VTI. VU is the top 500 companies in the stock market. It's almost near its 52-week low as well, so I think that has a lot of running up to do within the next 10 years. These are companies you'll hold on forever. One last ETF that I like to invest in is VGT. And VGT is the technology index fund, so it pretty much has all the best tech companies in it. And it's really been doing bad lately because tech stocks have been dropping a lot. Right now it's $18 above its 52-week low. Its 52-week high is $467. I think that it's going to go back up to its 52-week high within the next year or so. This ETF is very volatile, and you see on VU the last 5 years was up 75% on that ETF, but if you look at VGT, it's up 165%. That's 90% more than VU. And VU is one of the best ETFs, and you pretty much judge the whole stock market off the S&P 500, which is what VU is, and VTI is the total US stock market. And if you look at the max, VGT is up 650% in tech stocks. One of the best ETFs out there and one of the riskiest, but over a 10-year period, it's not that risky. If you go on the website, it says risk potential for VGT is a 5. A level 5 is aggressive funds, so this one is very aggressive. These funds may be appropriate for investors who have a long-term investment horizon, 10 years or longer. The unusually high volatility associated with these funds may stem from a number of strategies, right? So these ETFs you have to hold for 10 years. VTI is a little less risky, and so is VU, which is a number 4. And a number 4 is 10 years or longer of holding. So all these ETFs you have to hold for 10 years or more. And then you can come up here to the conservative funds. If you want to check it out, go to investor.vanguard.com. And you can look into all of their ETFs that they have. They have a lot of good ETFs, and I'm going to be investing in the aggressive funds for the next 30-40 years of my life. And if you want to learn more about ETFs, there's a video up there. Thank you for watching. Have a nice night, day, whatever. Like and subscribe, please. And I'm not dissing SoFi, by the way. I think it's a good company. I really like it, and I plan on investing in it. I'm just nervous about the stock market. Have a good one.